All right, what's up, guys? It's October 22nd, 2024. I know today was good for some people. Other people had a hard read on the market. We're just going to go over my quick synopsis of, kind of what I look at in the morning and throughout the day, right? Obviously, starting with a higher time frame prevents me from entering trades against larger higher time frame levels, which tend to be stronger, right? I've had this on my chart, on my daily chart, for since the rollover, and as we started to go, this level here, this gray box is the rollover range, and I say rollover range because I was following the open interest. Where did the majority of the contracts into the rollover occur? Where did the open interest occur? In these candles here. So I don't know if you can see that. There's a little bit of a wick here. There's a wick, and then this is the wick down here. So this is the rollover range. All I did is create a horizontal channel, copy it, and paste it above. So we have two measured moves completed. And as you can see, it plays out nicely because we had a breakout into after the rollover, retraced to it, held the level. Where did we reject? We tried to reject here. We broke up above, looked above the midline, came back down around this area here, came back all the way down to the rollover range, and we were holding. Then we come up. As you can see, this looks like it's a little bit of a resistance zone here. Resistance in this area turned into support in this area. Ooh, I don't want to do that. Let's go ahead and put this back where it belongs. So I also have a trend zone coming up, right? Trend line, it's more of a zone, and I have that for a specific reason. So when we do come back and retest it, I copy and I paste this onto my faster time frame chart, and I can go ahead and I can see the candles wicking off of this midline. I can see, because it's quite a little bit of a zone. Intraday, this is quite a zone to trade off of. So I can look at this midline, and I can see intraday. And if I copied this and I pasted it onto a faster time frame chart, unlike this day right here with this candle, this big green candle, we can see price bouncing off the midline, breaking below the midline, retesting, coming. You can see the battle at that midline. Tells me to stay away or use the midline to my advantage if I'm thinking it's going to be a support area or a resistance area, based off the setup. So now we know today it's this green candle here, right? We came all the way down, and then we rallied today, right? We rallied nicely. And then we close up here. So far we're selling off a little bit, wick down. Overnight action, it's only 6:48 p.m., so we don't have much data. So now that I know, and the reason why I do this is I don't want to go long. I don't want to ignore my daily chart and go long at the top of this zone on a faster time frame chart, thinking we're going to get a breakout. Because then if I get stopped out and I get battled and wicked out, and I look at my daily chart later on in the day, and I'm going to say, what the hell were you thinking? You were trying to go long to break a daily zone off of a fast time frame pattern. And the same thing down here. I'm not going to try to go short this on a faster time frame, break a daily zone, break a daily level on a faster time frame setup. I need to know, like, okay, this is going to be a strong level. What specifically am I looking to, certain pattern, certain setup type of day for that to break, right? So I don't want to go long up here or short down here without knowing where my location is. Totally fine to go long up here as long as you know you're going long up here. Totally fine to go short down here as long as you know you're going short down here and you have a valid reason for it. So that's what I like to look at my daily. Midline, I look at the midline, it's going to be a battle zone, right? Today you can see that the midline was a battle zone. We're going to remember this level, 20,461. 20,461. Midlines are battle zones. It's a take profit area, leave runners, or you can use it as a potential support and resistance if you can zoom in on the charts. But 2461 is what we're going to look at. So once I get the daily out of the way, just like that, I look over at my tick charts and my minute charts. I use specifically a 4,000 tick chart. Um, and this is what I have. We had this specifically. I'm going to look to the left, obviously, prior to doing anything. I have specific levels on my chart already charted, and I'll go over why I charted them. Do you guys remember this dump here that day? I'm sure you guys remember that. We just dumped. It was like 10. It was like market opened. We chopped, and 10 a.m. we just freaking dumped. When that happens, we create an imbalance, right? We create an imbalance. Now, I will go over that one moment. So you can see that on the 4,000 tick chart. Imbalances, they do like to fill, sometimes aggressively. Other times, I like to say they like to color in the lines, right? They like to color in the lines. It's like a coloring book. They want to color in the lines. So that was one of these days. Where's that? Where's that sell off? Is this the sell off? Price was at 5. Yep, this is the sell off. Okay. This is a 15-minute chart. I like to look at imbalances on a 15-minute and a 5-minute chart. That's what I like to do. And I like to find an imbalance that has no price action in between it. And when I say no price action, I want to see just, what was that? 597. So that's not it. That's the level right there. So looking to the left, I see an imbalance zone or an imbalance, this big 5-minute red candle and no price action in between, right? When I mean no price action in between, you don't see a candle coming down, a little bit of a green candle. You don't see any of this. You just see one big 5-minute dump. That created an imbalance. There was an imbalance of sellers in that area. So all I do is I take this and I will draw from this level here down to here. See that? Now we have an imbalance zone that will eventually have to get filled. Now if I copy it from this chart and I put it on this chart, you see it right there. Okay, so that's what we were filling. We're looking at it. This is a different imbalance. Holy moly, that was 657. Let's go all the way back there. That was October 15th. So we just charted another imbalance, but let's go back. October 15th, wherever that is. That's this one. So let's go ahead and chart this imbalance, which we can see here. This is a zone. So I didn't have it completely charted perfectly. Let's see what happened. But see, what I like is this is the aggressive part of the imbalance from here to here. These wicks to these wicks. Some would call it a fair value. Some of these are fair value gaps, if you will. But it's just a level it's just an area with no price action. We had no price action all the way down, and this obviously has created the imbalance in between this level. Zooming out, you can see London low is right here. This is a more conservative level, right? Because we sold off to it and then we broke down. So now we know this level is a little bit more conservative. All right, so that's our imbalance. Now, if we take this and we just drag it to the right, these imbalance levels are going to want to get filled. So see how we came up the other day and we filled the imbalance right here? We filled it, and what did we do? We sold off. That's why I have this imbalance charted, because I want to see it get filled. And look how we filled it. We filled it overnight aggressively. When they break into these imbalances, they do it aggressively. And also you want to look at like the middle of the imbalance, like right here. It broke the imbalance, came back, test held, and then we came up. Peaked above it, we came back down. Where did we retest? About the middle of the imbalance to sell back down, right? Where's price action now? Filling in the inside of the imbalance. So we're filling it in. We do have an imbalance that was created on this level here. And when I say that, if we move over to move this 5-minute chart over, that's this level right here. Let's bring this 1030. All right, so we have an imbalance here. In the beginning of the day, you would have seen this. This is an imbalance. Price came up, filled some of the imbalance, sold off. Eventually, price is going to want to come up and fill the entire imbalance. Filled. Held, broke down. So I chart any imbalances I see that have yet to be filled. So this is an imbalance. Copy and paste it to my tick chart. That imbalance, as you can see, that's what we were holding off on this whole time. We were trying to break and fill this imbalance, right? Filled, sold off. So I will do my daily chart. I will go to my minute charts. I will look to the left. I will see if I find any imbalance zones. This imbalance here that didn't fill, I will chart it and wait for the fill. That's one of the steps I will do when looking left, right? So this is something that I'll keep on my chart until it gets filled. It was filled, don't really care about it anymore. So now I'll take it off. As you can see, it got filled. Now I'll take it off. But what do you see specifically on this 4,000 tick chart? Look at this tight range here. Look at that tight range. Look at it just rotate up, rotate down, rotate up, rotate down, rotate up, rotate down. Break below, rotate, try to break out. Nope, rotate back down. But this is our happy place, right? Ranges are happy places. So with that being said, I have the range charted. I'm going to look to the left. I'm going to see, do we have any tight areas of consolidation, which you won't really see too well on minute charts. If I copy this and I go to that 5-minute chart, this is why I like to use tick charts. I mean, you see a little bit of a range here, but you don't see it as clear as you see it on the tick chart. Tick chart looks way nicer. This range looks way nicer. That's why I use the tick chart for ranges. And then from there, just typical price action stuff. You know, what do we see here on the 4,000 tick? We're wicking every time, right? Trend line. If we extend this trend line, let's see what happened today. Came back, retested it here. I mean, it is more of a little bit of a zone, but I was waiting for that to break today, right? We were selling off at the top of this. Notice how we were getting tighter in the range and tighter on the trend line. We're getting squished on the range and the trend line today. The range and the trend line, we were getting squished. Let's see. The other thing I was watching today was this trend line, right? Slowly, these wicks here, I was watching this. I just connected these. Could have connected other ones, like here. and then you could have broke down. But what I liked is I liked how clear this was slowly wicking up, right? I liked how clean it was. This, it looks so clean. How you go from the low, and these two wicks, it's damn near perfect. So I was watching for that to break, to sweep some liquidity. And this, let's see, let's connect those wicks. So this is a great spot for longs. Obviously, we're coming back into the range. See if we can find support here on the breakout pullback on this trend line. This trend line, we're looking for that. We got a breakout and we're pulling back. We got a breakout and we're pulling back. Then you would look for the long. You also have this trend line here that's holding. But that's, I look to the left. I do my daily chart. Look to the left. I chart those imbalances, which are seen on the 5-minute chart. And if you want me to go over it again, I will. I'll just do it real quick. You find big aggressive moves down. Go on the 5-minute chart on a big aggressive move down and zoom in on that 5-minute chart. Do you see any green candles? Or do you just see aggressive selling? We came down here. Yeah, we wicked up just a little bit. But that's because that was this low here, the London overnight low. And then we just freaking dumped all the way down. We dumped all the way down. Price came up. And now this you can see these few wicks here? That's where the end of the imbalance is. It's an area of no price action. When I say no price action, if it's a bearish move down, you need just straight, strong closing red candles, one after the other. If it's a bullish move, strong closing green candles. You don't want excessive wicks and any of that because it's not really an imbalance. You allow the sellers to get back in at higher. If we wick up, it allows the sellers to get back in. To go down, it kind of fills in some of the imbalance. It's not as strong. So put my imbalances on my chart and I will bring them to the right. Look at the daily, figure out my daily levels, chart my imbalances, right? Chart my imbalances. Now, I will remove the imbalance when they fill. Imbalance has been filled. I remove it, right? But that's what I'm just showing you. Look to the left, find my imbalances, chart them. Find your trend lines and chart them. Find your ranges and chart them. Ranges, trend line. Then intraday, we were finding this trend line here. So now we know on the minute charts, only the minute charts is when you look for the imbalances. I do 5-minute charts for my imbalances. I do tick charts for my ranges, and I do tick charts for most of my trend lines. I will draw trend lines on minute charts. Trend lines go on both. But ranges, only on tick charts. All right, so now we got the 5-minute and the 4,000 tick out of the way. Now we go into my 500 tick chart. Going into today, we were going to see this. My purple lines are always going to be my London high and my London low. So overnight session, this is today's price action. So everything from the green over here is today. So this is today. And this is yesterday. Right? So yesterday, overnight inventory is short. I have a green area here charted, and I keep this here just for my ease of access. This is my London zone. So my London session and it's specific times that I care about. This London session is 3 a.m. to 8 a.m. And I only have 3 a.m. to 8 a.m. highlighted here. That's so I can just easily find my high, drag up my London high, find my London low, and drag down my London low, right? So on days like this, let's get rid of this. So London was short. 8 a.m., 7:30, whatever that we found our low, we started to come up. New York session opens in this area here. New York session opened, yesterday in this area here. We got a breakout of the London, came and retest and held there, right? Held, battle, and then we broke out. When we break out, and I'm looking for that short back into retest London, when we're shorting back down into London, let's say you find a good setup, I try to take profits here, or partial profits or partials, because I usually expect a battle. It's a battle zone. So we broke it, came back up, almost retested it, so it's within the area of the zone of the battling, sold off. Where did we sell off to? Ticked almost exactly to the London low. That means we know London, maybe they started to, they took profits on the way down, and then they held here for the move up. And now they're going to defend it, wanting for another move up. So same thing at London. So profits or partials at London high here, shorting down. And if I'm staying short, I'm taking somewhere in the midline, which is going to be, midline is going to be somewhere here in the middle, right? See that? That's going to be somewhere where I take partials or more profits, as well as the low. The low, I'm all out profits. Because the chances of breaking below the London low after coming back into it, slim, I'm not going to say slim to none, but, it's less probable, right? So I want to be all out of profits down here. Where did we go? We bounced where? London high. Now, if you look at this, a lot of people will chart, they will chart the overnight session high, overnight session low. If you were charting the overnight session high, you would be charting up here. I don't like that. For me specifically, I don't like that. Because that's the Globex Open and Asia session. What I care about is London session, right? There's more volume in a London session. There's more traders in the London session. It's a more valid session to me. If you want to chart this high, so be it, if you can find it. But what I have found that works for me is the 3 a.m. to 8 a.m. London zone. And you can see exactly specifically how I use it. And the London zone, when it's like this, it will get tested more and you can still trade off of it more. So we came down, tested London low, where we come up to London high. Are you trying to go long to break London high? No, you want to do what? You want to, if you're long down here, you pretty much want to be all out of profits. If not, you want to maybe hold a runner. Where did we find price delayed and stalled out at? The London high, right? So moving into today's price action, right? I just kind of wanted to go over a little bit of my thoughts throughout the day. We break out, hold London high, and then we continue. I found those to be very powerful levels when they do, when it plays out. And you'll see it play out over and over and over again. So today, all I care about, I look, okay, yeah, we sold off in Asia, bounced up. London, we sold off. So let's go ahead and do exactly what I always do. Put my London high up here and put my London low right here. The lowest wicks or lowest price of the London session is here. The highest price of the London session is here. So I put that on my chart every day, every single morning. right? 3 a.m., 3 a.m. to 8 a.m. London high / low. That's what I want. My London high, my London low. So after that opens, I just kind of watch price action. I don't care about the first 30 minutes, right? I don't care about pre-market, whatever. I want 8 a.m. I want 3 a.m. to 8 a.m. So market opened. I'm not going to be somebody's exit liquidity. I know a lot of people love the volatility of the open, but I don't care about the open. So the open is going to be right here till around, 9:45, 9:50-ish, somewhere around here. I like to come in going into the 10 o'clock hour. So where did we fight at all day? So I ignore this. First half hour, first 15 to 20 minutes, I ignore. I'm not going to be somebody's exit liquidity. So as this is doing its thing, being volatile, we pull back. Now we try to make highs, right? So looking at the open, what do we have here? We can kind of say, okay, we're trending up, made new highs, trending up. So we have a trend up, made new highs. But where are we at? The London high. What am I trying to do at the London high? I'm looking at failures back in or breakouts above. I'm trying not to get chopped up because it's going to be a battle. London high, London low, look for battles. Down here, look for battles. When I mean battles, you're going to look for direction. Notice how we came down, tried to break out, tried to break down, tried to break down, tried to break down. Look at the battle. It's a battle. And then look here. You zoom it in. Look at these overlapping candles. It's a battle. Then we start to trend up. Okay. Start to trend up, come up to the London high, the purple level up here, and we start to battle out. Start to battle out. Start to battle out. Came down, and then that's when we rallied. Now, I want to go over that specifically, right? This London high level, I'm not going to say my trade execution, but it's a level to look at if you have a hard time on some of these choppy days in the morning when it's kind of ranging in the morning and then all of a sudden breaks out later in the day. Throw these levels on. 3 a.m. to 8 a.m. Eastern Standard Time. Let me just confirm, Eastern Standard Time. 3 a.m. to 8 a.m. Throw those on your charts. If you're having a hard time, throw it on your chart. You will see price battle out at those levels a lot. We will stay within the London zone until we extend. And you will also see, the London zone, you will see, look at where we bounced at. The middle of the London zone, right? It's a psychological level. Let's get rid of that. So, we trended up, we ranged across a little bit, or you kind of trended down here. See that? Breakout, continue. If you can draw trend lines on a tick chart, you can kind of see exactly how far we're going to retrace to. But let's go over this 30 level today and why I was loving it and wanted to reach that 30 level. So, in the morning, just to recap, daily chart, look at my daily levels, look at my daily trend lines, look at my daily zones. Are we at the high of are we a high bumping into resistance? And I'm trying to long, what am I doing? Am I expecting the breakout? If it's look for my support resistance levels and trend lines on the daily, make sure I have the right overall sentiment, that I'm not trying to bump my head up against resistance without knowing I'm doing it, right? Then I go ahead on my 5-minute charts and I mark my imbalance zones, right? Mark my imbalance zones. Imbalance zones are areas of, no price action. There's no price action here. This is just a big dump down. Strong red candles, no wicking up, strong, just strong. There's an imbalance of sellers. It will eventually fill. Doesn't always, obviously, because you can't have a bullish imbalance. That we're getting too far. That's the ADD kicking in. So draw my imbalances and extend them over. Once they fill, I remove them. So today, I don't need it. But on my tick charts, I will go ahead and I will draw my trend lines. This trend line, right, off these wicks here, and my ranges. Now I'm going to show my liquidity zones. What I'm looking at liquidity-wise. And that's where you have these lines on my chart. There are going to be intraday liquidity levels that I am watching to get taken out. So today, we are looking at a 5-minute chart. Let's put our London high and our London low. So now we know this is our London high, this is our London low. What do you see happen? London was short. They tried to break down and they held, right? They held into the open. They came up and now they're trying to break out of the London high. What are we forming? Some sort of if you're looking at intraday, you're looking at two things. Immediate trend and your intermediate trend. Immediate trend is intraday, we are trending up. What is our intermediate trend? We are pulling back. Okay? That's what I'm looking at intraday. Since the New York session started, we've been trending up. Then we started to pull back. As you can see, let's go ahead and put these on the chart a little bit better. All right. So we're rejecting at the London high. That's why I like to put the London high. Now let's look to the left and find market structure. And that's where the 30 level came in today. Market structure is this. Higher highs, higher lows. If we break it, now we broke a 5-minute market structure. But it doesn't mean it's a change of structure, right? It's just a break. So if we look here on the 5-minute chart, this is where the move started. We came up. Let's just talk market structure here. We came up. Where's our first pullback after that move up? Pulled back here. And then we made a move up. Okay, so this is the 5-minute. So now that we know that this is the 5-minute market structure, let's mark off that low. So now we know that this is the low. We're trying to move higher and we're rejecting. Where are all of these late longs putting their stop loss? When you're thinking liquidity, where are you thinking that these longs are putting their stop losses? Where are they putting stop losses? They're putting their stop losses right here, right? Everybody is taught the same thing. Put it below the most recent swing. That means there's going to be stop losses, liquidity. Stop losses and liquidity there. So if we're bumping, think about this real quick, right? Just stop thinking like everybody else. Start thinking like The market is exactly what it is. It's a market. It's an auction. It's an auction. If they are trying to break price higher here and can't do it, what's happening? Every time price is up here, you know, they have a shit ton of cars to sell. You know, when price reaches 55.20, nobody wants to bid any higher than that. Nobody wants to bid any higher. Price goes down. Oh, they want to bid. They want to buy it there. Okay, nobody wants to bid up here. Oh, they want to bid here. Oh, there's less interest. Less interest. Okay, less interest. And then now all of a sudden there's interest. Why? Because we broke this level. We broke the level where a lot of people wanted to say, yeah, that's the price I wanted. Then we start ripping, right? It's kind of start thinking of it differently. If nobody is buying here, why are we just going to break out without some sort of a news event? You know, we would need a reason, right? Either some hedge fund intern decides to wake up and fat finger an order. Yeah, that'll cause it. But like, we would need a reason to break above here. We would need volume coming in. If volume is not coming in and we're not getting an influx of buyers to break and continue, we're going to what? Seek liquidity, seek out buyers. Price is not moving higher. Where are we going to go? Seek out buyers. Where do we know the last location of the buyers? Last location of the buyers is right here. It's like just slow it down real quick. If price is not breaking out, we need to seek out buyers because we need a reason to break above. If there's no news event or catalyst to break above, we need to seek out buyers or also seek out liquidity, right? Seek out that liquidity, which is the same as seeking out the buyers. So price is going to retrace to an area where they can seek out the buyers to continue. Where did that so happen to be today? 24.30. Breaking that there, found the buyers needed for them to get in the rest of their orders to start moving higher. Because you can see clear as day that this is the pullback. Now you say, how do you know that that's the pullback? It's unclear on the 5-minute chart. Okay, zoom in on the 1-minute chart. Zoom in on the 1-minute chart. What do we have? How much clearer does that look? You have your London low bouncing. We opened. This is the New York session open here. New York session opens long. What did we do? We formed market structure. Look at how clear this market structure is. We moved up. We pulled back. And we continued higher. Now, why would you say, hey, is this market structure? Is this market structure? No. Why? If you can't answer that, you need to go back on your charts and learn what is market structure. Did we create after we made this high, we pulled back? Is this a new high? No. Did we break and we need to break that? Did we break it yet? No. So this level here is not market structure. Did we break it yet on this candle? No. Pull back. But then we continued. Where's the lowest point of this move? Right here. 430. 2430. Then we continued. All right, we start trending down a little bit. We're like intermediate trend down, but where's the most immediate trend? Up. Most immediate trend up, intermediate trend down. We came down, like, here's a lesson to learn as well. If you guys were watching that today, you had a lot of people lean on that liquidity. They leaned on it, which means they had their orders before it. They entered here. Yeah, they got a nice scalp up, but if they were going for a long-term move, what happened? They're going to enter here and they're going to put their stop real tight. So what happened? They entered, stopped out. ripped higher, and they watched the move happen. So you can see that's the intraday liquidity level. And let's go over the fact that you could see this on Bookmap. You could see these orders here on Bookmap. It was clear as day on Bookmap. There was like 60, 70 contracts sitting there, and it had been sitting there all day. So we break out, come back, retest, hold London high, retest like this trend line here, and then we rallied, right? That was textbook, right? That was a textbook liquidity grab. One thing I didn't go over, and this is where I talk about the whole ADD portion of this, time of day. Time of day is going to be key. I like to look at the 9:45 to 9:50ish to 10 to 10:15, right? I like this time for liquidity sweeps. This is a liquidity sweep. They swept the liquidity and then went higher. When they do a liquidity sweep at one of these times, I look for reversals, right? And they tend to be 15 minutes within this like half hour, 9:45 to 10:15, somewhere around there. And then, obviously 10:45 to 10:50 to 11:10 to 11:15, right? Somewhere around these every hour. Some hours are stronger than the others, and that's why this one was an anomaly. It happened at 1 p.m. Usually doesn't happen around 1 p.m., but sometimes it does. And when it does, it's nice. Worked out. But every hour. If you start holding off and watching to see if they sweep liquidity around these times. They swept the liquidity at 10:43-ish. 10:43, they swept the liquidity. And then they reversed. I love those. Sweep the liquidity around those key essential times. That would be 12:45. That's like the 12:45 p.m. to 1:15 p.m. liquidity sweep. Look for reversal. Look for the reversal. Why? Why are we looking for the reversal? Because the most immediate trend is up. The intermediate trend is down, sweeping liquidity where the previous level where the buyers were. We have this trend line. We look for that reversal, break, hold, and go. If you're looking at it on a 1 minute chart, that's what we're watching. I hope that helps. I know I kind of go all over the place. My brain is like wired a million ways to one. I'll probably jump on voice and go over some stuff if you guys want to, just to try to, clean up some of this stuff. And, and I'm sure a bunch of people have questions on it because I have like a multifaceted approach at looking at the market. But main thing I do, look at the daily chart, look at my daily levels, know if I'm butting my head up against a resistance, know if I'm going and testing a support. Mark my 3 a.m. to 8 a.m. London high, London low. Mark my ranges on my tick charts, trend lines on my tick charts. And also on my minute charts, mark my imbalance zones, right? The levels of no price action.